Thank you very much for being here. Topic quite strange maybe for of you. The problem is not strange. Lapses in life insurance. I think you are most of the people from life insurance companies here, so probably you know what the problems those lapses do to you. This is our statement. Within the first 5 years, more than 50% of contracts lapse. What's your experience? This is our experience from the market that we have as a LIMEWOOD have. Do you agree with this statement or it's exaggerated from your point of view? Yeah, so it means that the problems and the negative effects those lapses produce are quite significant and are probably on the table of each life insurance companies. The way how to deal with it is on the table of the board managers probably, and then they have to decide how to accommodate to market developments and what kind of actions they have to do with the lapses and how to adjust their let's say portfolio and the sales processes to mitigate the risk that they acquire through the life insurance policies that lapse. So traditional approach to analyze what is happening in the life insurance portfolio is that you have a core system, you take some samples out of the core systems, you somehow measure it, you give it to your people under, let's say, the risk department or wherever in the company you want, then you get the statistical results and then you somehow take the actions. Yeah? So this is probably the most common approach. The weak point of this approach is that it really takes a time to get appropriate results, and while you get it, you are probably maybe missing something, you are behind the curve. Fortunately, the development in the IT recently has moved forward, and there is some kind of buzzword called big data, which is something not already new, but still as a buzzword. So what does it practically mean, big data applied in the commercial world? It means that you have such kind of device with you, yeah, you can use it. You have live data there, so right now I have a live portfolio of 1.2 million contracts. You can play with it, you can run the statistics analysis in it. So this is how I'd like to describe it to my grandmother, just to easily understand what is the big data and how fast it is and what you can do with it. In a practical way, big data means that you have data inside of the memory of the computer, so you can easily and quickly get to the information you need. You have all the data in the real time, and you can, in the real time, run the statistical analysis on it. And within the new methodologies of the, let's say, HTML5 displays, you can display this information in a much more sophisticated and easy to understand manner. And big data means that if you display it and you click something on the graph, you can dive into the data. You can go into, you can find what are the causes of your problems. You can find which contract is at the risk, who is bringing this contract. You can generate exactly from the graph, generate the text file or Excel file and send it somewhere to your system or to your people for further analysis. So this is the big data. Yeah. So lapses itself are quite a difficult issue. It needs to have skilled experts. It's time consuming. It's like finding a needle in the haystack, so sometimes you don't know what you are looking for. What are the patterns, why the contract fails. You need to run multi-criteria analysis. You need to have a specialist that are really into and can explain you the data and find the patterns for you. And also you have to have several kind of enrichment of the data that will provide you the proper information. How to address the lapses? As I mentioned, the big data is the solution which can really enhance you the view on the data itself, and especially if you then deploy specific statistical and mathematical analysis into the algorithm, then you can run this algorithm, statistical algorithm, through the data all the time you need it. And then you can really, each day or each second, depends on how often you upload your data into the system, you can really have the proper view on what's going on in your portfolio. So not to be too general. So this is from our system, the typical benchmark portfolio that we have. This is for a 15 years history. So now you see the dark blue are the active contracts. Those are the real data from one insurance company that represents let's say the average that we found. You see the brown and yellow are defaulted and lapsed contracts. So you see it's more than what you have living in your portfolio. And only small part of it is the endowment. The other one, it's like a technical migration, whatever, that is in the system and doesn't really statistically matter. But green one, you see that only 20% of your portfolio really lives out until the end of the duration of your contract. What you can do with the big data is to dynamically display the view on the whole portfolio. You can display the view on the sales channels, on the products. You can assess the risk of your portfolio, of your active portfolio. This is the red top of the blue column. So you can evaluate using the backtracking methodologies and forecasting methodologies what kind of your portfolio is at risk. And just by clicking on the red, you can dive into the product analysis and you can analyze which kind of product really causes you. This is a kind of new and interesting view on the product portfolio and using the financial impact. So the box size represents number of the lapses in your portfolio. So the bigger, the more lapses you have. And the color represents the sum of lapse premium. So at risk, you have the product number, let me see, 172. Why? It's a small number of the contract itself, but with a really huge amount of the money embedded inside. So what you can do, you can go inside this box, you can check who brought this, where is it regionally distributed, what kind of clients are behind, through the age, gender, whatever. So you can use your own analysis and you can really quickly generate the list for example, for CRM to take some action for upsell or whatever. So this is the managerial decision. Another way what the big data can do is other kind sophisticated analysis for, let's say, the middle management, where you can see that you can swiftly generate in, let's say, tens of seconds, quite huge correlation matrices for your products. You can deploy the external factors that will show you how your products are dependent on the external factors like unemployment, wage change, age, whatever. So you can see it immediately, and then you can send this data, for example, to actuaries, and they can fine-tune the product. So you can fine-tune the product, or you can fine-tune the commission schemes out of these decision trees. Even within this decision tree, you see how you can just select the various criteria that you might think that your production should depend on. And it shows you how it goes through your actual portfolio, and you see at the end that you have the red and green columns. Red ones are the ones that are gone, green ones are still alive, but you see that there is a risk. You can click on it and generate the list of the threatened contracts out of these as well. So these are the most analytical tools, not for management as a dashboard, but it can be used. One of the really important and interesting features of the big data is that you see all the time the whole portfolio, whole data, and the characteristics. And in this case, you see that how the contracts behave through the various products. We have 2 products there, through the age of the client. So the blue line means that those contracts are active. So you see the modus is around 40, 41 years. So those clients are more stable, but you have a problem where? You have a problem selling the policies to 23, 24 guys and girls. So because there is this is actual your curve, and you see that at this age, the contract lapses very often, yeah, with highest frequency. So now, what is the role of the management in this? To narrow the blue curve, yeah, but decrease the brown curve and yellow curve, because those are your costs, those are your losses on your balance sheet. When you get the young client, and he doesn't pay, and you already paid your commission, you already made your results, whatever you have, then you have a problem. You have commission out, you have a clawback. Question is whether it will be paid or not. Then you have your investment policy somehow made on your balance sheet. You have to report it. You have to do a lot of many things which influence the bottom line. So the question is then, well, find a way how to decrease the yellow and brown curve in your portfolio, and how to increase and make it much more narrower, the blue one. Yeah? And you can see it in the time how it develops for whole portfolio, for product segments, for sales channels, for region. So this is the beauty of the big data, that it gives you any kind of view that you would like to see. What I'm showing you are just our prescribed dashboards for management that we have described for managers that can use daily or monthly on the boards, but the possibilities are endless in this analysis. And this is one of the dashboards I mentioned, that you can see the distribution of your products, your portfolio, through the region, through the sales channels, through the statuses, and through the risks. That you have it at once. Yeah? And if you click, for example, on the map, you see how much of your portfolio is at risk using the methodology of calculation we are using, and how much is risk-free. And if you dive in, you can see the particular contracts that are at risk, and you can take the action. You can see which channel brings you what kind of size of the production. And for example, number 2 channel is bringing me less contracts, but with higher premiums. Does it mean it is more riskier or not? We don't know, but you can dive in and you can check the characteristics, okay? But this dynamically change in the time. So probably after 1 year, the characteristics will be different, because it takes into account the whole data, the whole portfolio data. Yeah. This is another example. Just you can click on the tab and you see the exact value, how much they brought you. You can select the period, you can select the region, you can select the sales channels, whatever you want. You have immediate information on the portfolio. Yeah, this is what is risk-free and what is at risk. The same. Product structure, the same analysis. It's called a tree map, that you can display the products. It means the number of the products and number of the volume of the premium, and you can even choose the product, and then you will see that the curves below will change. Then you will see what kind of characteristics of the clients you have immediately at one glance. You don't have to run the analysis; you have it in the table, in the tablet. You can even choose the production via the sales channels, just using the selector, or if you want it for last quarter, 1 year, whole life. So it's pretty dynamic. And maybe last dashboard that is to be presented here is the prediction overview. So this is quite interesting information that you can see from this dashboard, based on the history and the prediction statistics that we use, that how it is developing in the region by the sales channels, what is the composition of the production of the sales channel in your portfolio, based on what is risk-free, what is at risk, and where is the highest risk. And you can tap, you can dive in, and you can choose the contracts that are at risk, for example. And you can show it also to brokers. Look, you are bringing me this kind of quality of production historically. So it also helps, I think, to improve the communication and argumentation between the brokers and the insurance companies. So those are the outcomes of the labs analysis based on the big data. So you can identify the threatened contracts. You can modify the parameters of your products, of your commission schemes based on the real data that you are getting out of the system. You can identify outliers. You can identify geographical abnormalities, for example. Maybe you can decide that in this region I'm not going to sell in the life insurance because based on my behavior, what I have in my portfolio, it really makes me a loss. So I don't want to sell it there. Or I will sell it, but at different conditions. Maybe I will not pay such a high commission to a broker, or I will increase premium. So this is the answer to how to do it. 3 minutes. I will catch. So still compensation schema modification, amendment of commercial conditions for partners. And also you can use it as a lapse ratio, as a KPI, either to internal network or to external networks, or to management itself. Let's say, for example, to chief sales officer, as a part of the compensation scheme. So 1 minute, how it helps. Efficient management tool for daily management. It's since it is using the whole data from your core systems, it provides a sufficient data granularity, so you can really work with this data. It's not only sample. And what we also witnessed is that auditors are pretty interested in this because they are requiring this kind of data from the insurance companies, and they are pretty fighting to get this data on both sides from the systems and somehow to evaluate them. And even regulators are looking after this kind of data that, do you guys know what's happening in your portfolio? So it's not only the management tools, but it's also help you as a companies to report properly to authorities and to auditors as well, and to your shareholders. So thank you very much. I hope I finished quickly.